Money FM 89.3. Best of breakfast. Companies to watch.
Looking for great ideas to trade? Well, we've come to the right place because we've got the right man to tell us what to look out for. Dan Koh, good morning.
Good morning, Ryan. How's Tuesday looking?
Looking pretty good. So what have you got for us today?
Okay, well, today I've got you turning to one of the world's most liquid international market for the benchmark equity indices of China, India, Japan and ASEAN. I'll give you a minute to think about what that is. But meanwhile, welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends and risks and hidden gems and warning signs to steer clear of. So be part of the conversation, 88550893, and tell us whether you think it's going to be a hot or not. Okay, any clues so far, Ryan?
Yeah, I'm thinking it's got to be an exchange somewhere. And
yeah,
I guess since we've been hearing a few headlines around this MAS proposal to revive the stock market, I'm thinking you've got your eye on the SGX.
Very good. That is absolutely right. It would be the exchange that's considered to be Asia's most international multi-asset exchange operating securities, fixed income and derivatives markets to the highest regulatory standards. Singapore's primary asset exchange, or aka SGX for short. Now, what's the latest buzz behind the Singapore Exchange? Well, its shares jumped almost 4% yesterday, following the announcement of initiatives to revive the stock market by a review group led by the Monetary Authority of Singapore. Now, there are lots to break down today, but I'll try to make this as digestible as possible. So, firstly, what it includes is a $5 billion initiative called the Equity Market Development Program. And basically what it does is channel the funds to asset managers with a strong investment track record and a focus on Singapore-listed companies or equities, because beyond strengthening the fund management ecosystem, the $5 billion injection also seeks to boost trading liquidity as well as encourage more research into Singapore-listed companies. We've been seeing how the Singapore Exchange has been feeling relatively dry when it comes to IPO here in our local market, isn't it, Ryan?
Yeah, the past year has been pretty rough, especially when you look at how Malaysia has taken on a lot of listings, but not so much of Singapore. And then we look at a wider backdrop, you have a lot of folks enticed by all the sexy headlines around NVIDIA and all the big names, but not so much with what's happening back at home.
Yeah, unfortunately, it's always all about the international players that's been catching the interests of local investors here. So regulations are also likely to be streamlined behind this $5 billion injection to make the listing process more efficient and to be more focused and facilitative of listing. So the updates come in addition to tax incentives that we've heard last week in Budget 2025 to get more companies and fund managers to list on the Singapore Exchange as part of their measures to boost the local equity market and, of course, cultivate more quality IPOs that might pique investor interest and build a greater range of Singapore-focused funds to boost international or institutional and shareholder involvement in listed companies. So the measures announced also expect to encourage broader investor participation in the local stock market beyond the just 30 counters that's listed on the Straits Times Index. So that's for one, the $5 billion injection. Now, another key measure you want to take note of that was unveiled last Friday is a revision to the Global Investor Program, which basically grants permanent residency to eligible foreign investors. Now, the Economic Development Board, which administers the GIP, said that they will adjust the requirements for family offices, requiring them to invest a more targeted proportion of their assets more directly into Singapore-listed equities. And under the revised rules, single family offices must allocate at least $50 million of their assets under management to equities listed on the Singapore-approved exchanges. Overall, it does seem like the prospectus requirements and listing processes is likely to be streamlined, especially in areas of financial disclosures, interested person transactions, and conflicts of interest. All in all, it could start or potentially start a ripple effect, driving billions of dollars of incremental flows each year. How do you feel about that so far, Ryan?
Yeah, it's a great step in the right direction for sure. And I think the interest that might come forth with the targeted move, for example, getting investors to invest in Singapore, not just a big stock, but all the other stocks outside of the big 30 STI stocks, is going to go some ways to improving liquidity, more interest. And I think in time to come, more brokerages will have all these endless reports to give more insights and trading ideas as well.
That's right. It's all about diversity we're looking at here and liquidity. And this is all in the hopes of MAS to reinvigorate the market and, of course, to bring in more interest of international investors and local investors into our stock market. Now, they are set to unveil a second set of measures by the end of the year. And according to Morgan Stanley, this demonstrates that there is sufficient political will to ensure that efforts to entrench Singapore's position as a global financial hub remains successful. That being said, though, it's worth noting about what analysts are saying about the government's plan. They say that even though it's a strong commitment to improving market liquidity and valuations, it's not the direct sovereign wealth fund participation that many had been hoping for. So on top of that, they added that while the investment fund alongside the involvement of family offices is relatively useful, it is only expected to contribute about a 1 to 2.5% increase in trading volume. So not as much as they were hoping for. And that remains to be seen how successful this latest initiatives by the MAS is going to be. So with that being said, I think my verdict for today for the SGX is still going to be a not. What about you, Ryan?
Yeah, I like the proposals, but at the same time, I am a bit cautious because there is a lot of competition when it comes to attention, for example, like folks like you and me are spoiled for choice in the international marketplace, and we hear a lot about all the other big companies that are just booming, like AI and so on. So there is going to be a bit of a uphill struggle of sorts for the SGX.
It's a tough fight.
Capture back this market.
Yeah, but then again, it's a marathon. It's not a sprint. And as of the 25th of February, we've got Tip Ranks, Yahoo and Barron's all giving it a hold rating. And that would pretty much wrap it for us with SGX today. Now, Ryan, did you know that the Singapore Exchange was formed on the 1st of December 1999? And can you just guess how many listed companies were, listed on an exchange when its IPO?
Well, it's a tough one. I'm thinking
rough number, right?
100.
That's a bit too little, right? 400 companies.
Oh, okay. Close. I'll say
close enough. Now it's just over 600 companies listed on its exchange just about 26 years later. With that being said, why do accountants have a lot of spreadsheets?
Oh, why?
Because they always excel in their field.
Right.
And that's all we have for SGX.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.